So in the last 7 months, I've gotten almost $500 in passive income without adding anything into my investment portfolio. And this amount is just continuously growing despite the ups and downs in the stock market. And I've been diligently tracking this with my portfolio tracker, where you can get a free copy in the description down below. But having said that, the portfolio that we have right now is going pretty well, and I'll show some numbers on this side so you can see how it has been growing year on year. And the ideal goal that I have for this particular dividend portfolio is to hit $1,000 in dividends a year, and then from there we get a lot more freedom to make more investments. And the beauty of dividends is the ability to earn income passively without needing to worrying if the market is going up or if it's going down. You'll still receive dividends on a regular basis. But having said that, this doesn't mean that this is an unlimited money hack.
Fred and Barney, money unlimited.
Because the company don't perform, dividends might still get cut, just like what happened with Disney during the COVID period. And in the last quarter, work has been very busy and hence less video goes up. But this also means that I have less time to look into investment on a whole, and therefore I'm formulating a simple process where I can move money once a month, and then that sets up my investment strategy for the whole month. So the beauty of this strategy is that I can log in once a month, set things up, and I leave it as it is, and it does its own magic. But the following strategies might not be for everyone because of the risk that they carry, be it with fiat, be it with stable coins, or be it with crypto. These investments do carry some risk, and I highly suggest that you look through them before deciding if you sign up with one. So the first strategy that I have, or the first DeFi protocol that I'm using, is Cega.fi, and we've spoken about that before, and this is something that I really like because it's in a DeFi space, which means that the yields are much higher than what you can get in the traditional arena. So Cega.fi is a structured product on a decentralized finance platform, of which you will need a wallet to access this platform. So Cega.fi is a structured product on a decentralized finance platform, of which you will need a wallet like this to access the platform. And if you haven't, I would highly suggest getting one, especially a hardware wallet. This will ensure that your tokens are safe when you interact with these protocols. So links will be in the description down below, where you get 5% when you purchase a hardware wallet. So on Cega.fi, they released a new strategy called Bull Shark. So Bull Shark is a principal protected strategy that generates yield for the investor. And they do so by leveraging on a strategy called Shark Fin, which combines an option and a bond lending component. So with Bull Shark, you can deposit USDC, USDT, Ethereum, stake ETH or Bitcoin, and you get yields based on whatever asset you deposit. So I put in USDC to get an APY of 35%, which means my 1000 USDC will generate $5.98 in USDC as a guaranteed yield, and I get a bonus yield of 0.57 USDC. So if you look at my Bull Shark strategy, there's a strike and a knockout price. So if Bitcoin, or the price of Bitcoin, stays within the strike and the knockout price, I will get my guaranteed yield plus the bonus yield. But if Bitcoin goes under the strike or above the knockout price, I will only receive the guaranteed yield. So I think this is one of the interesting kind of strategies that you can use, which comes with a little bit more risk. But moving on to stablecoin farms, there are quite a few stablecoin farms that is available in the market. But if you're more of a stablecoin kind of person, there are quite a few farms out there that you can use. So the most common and the easiest one to get started with is CoinBase. So if you essentially deposit USD or you swap Sing dollar to USD in Coinbase, you will get USDC, which will automatically yield 5% on your USDC balance. So this is done automatically and there is no strings attached. The only one condition is that I feel that is a downside, is that the yield or the interest is paid out every month and that is calculated on your daily average balance. So if you're looking to get started with Coinbase, links will be in the description down below. So let's say if you feel that Sexus isn't something for you and you want to play in DeFi space, a protocol to consider is MarginFi on Solana. So MarginFi allows you to deposit and supply USDC to borrowers, and you can get a range between 10 to 20% in APY for USDC. And with high APYs, it comes with higher risk as well, like smart contract exploits, rug pulls, and all that bad stuff that can happen in the crypto space. So lastly, let's look at the fiat side of things. So fiat might be a little bit more boring. But because work is getting more and more busy, it's very tricky for me to kind of remember my minimum spend. Have I hit it? Have I done that 3 spending? Have I done this? Have I done that? And it can be pretty difficult. So for the fiat segment, I'm focusing on only cash only kind of strategies. So there'll be no cuts, no minimum spend involved. So right now I'm using Chocolate Finance for my cash holdings, and I know you guys probably saw a lot of people promoting it, but here's my thoughts on Chocolate Finance and how you can take advantage of it. So for the first $20,000 that you have, Chocolate Finance will give you 4.2% in interest when you deposit those funds with them. Pretty straightforward and easy to understand. So what I like about Chocolate Finance is that the interest is paid out on a daily basis, which gives you motivation to lock in to look at money flowing in every single day. So this kind of makes me happy on a sad or tough day at work. And based on calculation, with $20,000 deposit, you can look to get $2.30 a day, which in my opinion is great because it kind of pays for the coffee that you drink if you drink coffee every day. So any amount that you deposit after the first $20,000, it will try and earn a target yield of 3.5%. So one of the biggest questions that a lot of people have is, how is Chocolate Finance doing this?
It don't make sense.
So when you deposit money into Chocolate Finance, your money will get split into 3 to 4 different funds. There's Dimension Global Short-Term Investment Grade Fixed Income Fund, there is UOBAM United SGD Fund, there's a Fullerton Short-Term Interest Rate Fund, and Lion Global Short Duration Bond Fund. So I dug a little bit into all these funds, and you can see that Dimension pays out about 4.5%, UOBAM United SGD Fund is up to 4% APY, and so with the basket of funds that Chocolate Finance has, the 4.2% that I see they offer to the first $20,000 you have is a little bit like the loss leader that you're using to attract more money to be placed into funds with them. But with everything else, there is also some risk with this as well. So Chocolate Finance is not SDIC insured, so you might potentially lose all your money if shit hits the fan, and this is very similar to the stock market or any funds out there. So since we're in the beginning of Q3 and it's gonna be a pretty busy one for me, I'm hoping to leverage on all these strategies that I've shared to help me more or less automate my investment, manage my money better, and hopefully when Q4 comes in, it will be a less busy time where I can look at more DeFi stuff or explore alternative investments. So I know it's been a long time since I've uploaded a long form video. I'm trying to experiment with more short form videos, but I'm very happy to get feedback from you. So if you have any other questions, do let me know, and as always, stay safe, invest safe, and I'll see you guys in the next one.